Aaron, welcome back to the channel.
Thank you. Good morning. How are you doing?
I'm doing really great, and this is a conversation that I've been waiting for quite a while, because the first time that I came across this profitability report from the service leadership, I was really blown away by the amount of content and the interesting data that I was able to learn from it. And listen, I'm really thrilled, and thank you so much, Aaron, that you have agreed to take the listeners through some of the content and some of the examples of the report. It's an amazing piece of work, and I really and I re- I- I'm really super happy. I purchased myself the report. I've seen the snippets of it during some of the presentations and the events, but I'm really super happy that you have agreed to share with the guys a little bit, what's inside the report.
Absolutely. And thank you for having me. I'm really excited to join you for a little bit and share some of the insights. I've been around service leadership for probably about 7 or 8 years, and I've mostly experienced the report from the viewpoint of similar to yourself. It would come out every year. I look at it, see a lot of good insights. Over the last 2 years, I've actually been very hands-on in writing some of the content and curating some of it. So I've got to see the other perspective, and we put a lot of time and effort into it, have a lot of great insights. So yes, there is a wealth of information that we have available. So happy to share some of these insights.
Give us some of the background information, Aaron, because it's amazing, the amount of data and information that is available there.
It truly is. It truly is. So we have been putting this on. It's been about 2025 is our 20th year of producing the report. We have thousands of TSPs across 104 countries who participate in our benchmarking, and that benchmarking that's done quarterly with the Service Leadership Index. We take that data up, aggregate it from over the year, and that's what we use to produce the report. Over the course of every year, we put on about 110 metrics, got about 500 fields of data that we report on. And all of that is what comprises the report. And the report comes in usually about 350. I think this one is a little under 400 pages of content that we have in it. So it is very lengthy.
And if I understand correctly, let's go back for a second.
Sure.
If I understand correctly, this is an actual data. It's not a survey, right?
Correct. So the survey piece is the quarterly surveys is what we call them. So every quarter, the companies, the TSPs who participate in our benchmarking service, they submit their financials to us. So 4 quarters of the year. At the end of every year, we start working on analyzing that data for the entire calendar year, and we use that data for the year to produce the profitability report.
But the data that you are using it's an actual data that the TSPs are using based on the kind of a structure that you have agreed with them to use. Because I understand that you have certain account structure, certain kind of a setup that you work with the TSPs, the channel partners, the technology service providers. So they structure their accounts, the reporting systems according to certain guidance, if I remember correctly, correct?
100%. So we have some very particular titles or naming conventions for different streams of revenue. So think broadly product revenue, service revenue, but depending on the predominant business model, or PBM, we call it for short, that the business might exist within, there's different streams of revenue that they earn. So jumping ahead to this next slide, just real quick. So there are 9 different PBMs that we benchmark. And so this flow chart here just helps folks try to understand how we segment the TSP industry. So based on the percentage of product revenue to service revenue, that's going to determine if you're product centric up at the top, or if you look at the green and then look at the orange colored boxes on the far right, whether you are a service-based company based on your PBM, and then what type of service base. So are you more technical services, more one-off, through to managed services, the more monthly fee type, or in the bottom in the orange, those are applications. So companies who are making applications for other companies.
Exactly, and what I think is extremely unique about this report and the methodology that service leadership is using is, if I understand it correctly, there is a certain structure of fields and information and very precise definitions what is what.
Mhm.
So there is very little ambiguity in how to interpret certain streams of data, not only for the revenue but also for the other parts of the business operations. Correct?
100%, yes. So to give you a good example, so think with respect to services. So it could be more one-time services. The break fix type work is usually the name you hear used a lot, through to project services. So think we're doing a big multi-step project that will take many months, through to managed services where there is a monthly contract and a fee that a customer pays. We treat those very differently, and we ask everyone to report on those separately so we know exactly what those revenue streams are. So that way, when we do our analysis of the data following every quarter, and then when we produce a report, we can see with a very high level of objectivity what folks are earning for revenue levels, and then what their gross margins look like across those different revenue streams.
But this goes beyond just the revenue streams. If I understand correctly, it goes down to the SG&A, marketing, sales. There is a certain granularity that is aligned with the whole sleek and SLI methodology of service leadership that is collected from the channel partners in a very structured way. So you can really tell more than just the high level revenue overviews. You can really deep dive into individual levels
Mhm.
of profitability per certain business type of cost, and how this cost relates to the revenue, etc., etc. Correct?
100%, 100%. Yeah, most of the real granularity is with respect to the revenue, as we've talked about, and also the COGS, so cost of goods sold. When you get into the SG&A, yes, there are some breakouts, but it's not nearly as intricate as you'd see with revenue and the cost of goods side. But yes, it is very particular. I wish I knew the number off the top of my head, but one thing is that it takes a little bit of time for folks to understand that structure and then start to make sure they're doing it right. So there is a little bit of a short little learning curve. Yes.
Okay. So this is like 20 years of the kind of a consistency here. So there's also a lot of kind of understanding how things evolve over time, and how really to benchmark one company versus the other, but also different years, and observing trends over the years. And
Yes, yeah. So given that we've got that long history, we do have quite a bit of understanding of how the industry has changed over time. And when you get into the report, you see a lot of those details. When I look at here, so the slides that I have here, they're mostly focused on 2024, so not that whole 20-year period, but we do have that as part of the report. Yes.
mhm.
Um,
And
here is
and
one.
in the previous slide, you had different parts, and I just wanted to break it down for the folks that might not. So the product centric would be basically equal to someone who is a purely reselling hardware. Okay, it's the hardware, the classic hardware resellers that we know very well. Technical service and project services are also do belong to the non-recurring kind of
Mhm.
parts of your business, correct? So the fact that
Correct.
you are having a product centric and a little bit of a technical services and a little bit of a project services doesn't necessarily make you an MSP, which is this kind of a fourth from the top section, which is the managed services, which for many of our conversations, of my conversation, my focus area is how to get more from this particular area of your overall business revenue streams. Yeah.
Yes, 100%. Yeah, that is the dream and the goal for many TSPs is to deliver more managed services. And there's a lot of different factors. That one of the primary ones is the valuation of that revenue and that type of business is significantly higher than technical services or project services, just by the nature of the revenue. It's recurring, it's ongoing, and that has a lot more value to a buyer relative to the other revenue streams. Yeah.
And many times carries way more profitability than the other ones, correct?
It absolutely does. Yep. We'll talk a little bit about that. I've got some of that in some of the subsequent slides.
Okay.
Was there anything else you wanted to touch on here?
No. Let's go ahead to the next one, because it actually goes into this kind of a differentiation. I understand here we see all the predominant business models. So all the companies combined, how they performed in 2024, if I'm not mistaken.
Yes. So these are the profit and loss ratios by profit quartile across all of those PBMs that we showed on the previous slide. So looking at the bottom portion of the graphic, so these are the exact percentages we see. So from left to right, you got product gross margin and services gross margin, then total gross margin. And then when you look at the rows, what you're seeing is the breakdown between the profit quartiles, we call them. The red is what we call the bottom quartile. So part of our methodology, how this all comes to be, is we look at all the companies who do the benchmarking with us. We look at their EBITDA, their bottom line profitability performance, and then we stack rank them. So if there were 100 companies, the bottom quartile is that 24.5% at the bottom. Your median is the middle portion, and then that best in class is that top 25 percentile, or that top quartile is what we call it for short. So when you look at the three margin figures that we've got here, you see some pretty significant differences. So calling out just the total gross margin for bottom quartile sits at about 30.7%. Well, if you look at best, let's start at median, they're a little bit higher at 34.8%, but then you look at best in class, they are earning almost a full, 11% at 41.2%, more gross margin dollars than your bottom quartile. So there's a huge difference there in profitability.
That's true. And you can see that even if you're kind of thinking about this from the product-centric, kind of a partners.
Mm-hmm.
Look at the first three columns, right? Product gross margin. If you are making less than 20% margin, 19.5% margin, means that you are in a bottom 25% of the companies here currently on the market in 2024. Anything less than 20% in pure product margin means that you are not doing a great job, delivering value to your company. Best in class actually are doing 28.5 or more % on the product revenue itself.
Yep. Almost 10%.
10%. Almost 10%. Yeah. And then what is also very interesting is, which is reflected in the total, when you look at the services gross margin, the lowest, the guys that are not doing a great job in the services revenue make 35.8% gross margin on the services, which is like 7 points higher than whatever you can do the best on the products, which is another pretty interesting story, right?
Yeah, 100%. Yeah, and that speaks to, again, that trend towards more services, more delivery of services as part of your revenue, because, again, the margins are higher. So, yeah.
All right. And if I'm not mistaken, in a full report, you probably have the breakdown of the services gross margin between those kind of subsections that we were talking about earlier on, right? Technical services, project services, managed services. So you could go even further down in the details for the gross margin and show that if we were looking at the full report.
We absolutely do. So across those different PBMs, we have a section for each that breaks out what the revenues, what the cost of goods are, what the margins are, the bottom line profitability, and then some of these cost ratios. So you can see that for each individual PBM and see those differences in granular detail. Yes.
Absolutely.
Now, if you look towards the right side of the chart, we have the sales cost figure. So sales cost %, G&A cost %, and SG&A cost %. And if you look at them, you actually don't see as much disparity as you do with respect to the gross margins. So looking at bottom quartile, you see that the bottom quartile are actually spending the most on sales costs, G&A costs, and overall SG&A. Then you look at the bottom row, you see that your best in class, they're spending the least. So they are much more efficient in their usage and in their cost structure. If you look all the way to the far right and
Not,
just draw
not
your
only
attention
that they
there.
make the most amount of money, right? They make 41% of the gross margin on the totality, but they're also way more effective on the costs, on the sales costs,
Yep.
as a percentage of the total revenue.
And you can see what that results in at the far right in this red box here. So for the EBITDA performance, so the ultimate profit and loss, your bottom quartile, they are losing just it's 0.1%. So almost at break even, which is one of the best performances we've seen over the 20 years that we've been producing the report, but still losing money. Look at your median at 9.3%, and then best in class 19.5%. So almost double. Well, just a little over double your median and significantly higher than that bottom quartile. So you see a huge disparity here in terms of what that profitability looks like.
It's even it's almost infinite, right? Times higher, because this is a negative versus a positive value. It's always very difficult to compare. It's just the difference between, like and bear in mind that the red one, the bottom 1/4, is an average for this group of people, right?
Yes, great
So there
point.
are people that make much worse results than that. Okay, many of them are basically losing money, a lot of money.
Yeah, there are some who are making a little bit, and there are some who are losing a lot. But yes, it is an average, and is the same. The same is true for the other two quartiles as well. This is just the average. So there are some I know of MSPs who they're hitting 30%, 25, 30% EBITDA. Great performance. There's some who are just below that 19.5%, still doing great. So yes, there is some variability there. You're absolutely right. Here is a look at what we saw for average MSP and VAR. Again, that product-centric PBM revenue growth. And you see a pretty substantial difference between those two PBMs here. So in the blue, you see year-over-year total revenue growth, 7.1% for MSPs versus 1.8% for VARs. In the green, that's your product revenue growth. So it's about 6.5% for your MSPs versus 2.4% for VARs. And then in total, or excuse me, I shouldn't say in total, service revenue growth in the gray, 7.5% for your MSPs. And it was actually a contraction of 1.2% for your VARs in terms of service revenue growth.
What I really find amazing, Aaron, is that even MSPs, even from the product revenue growth perspective, are way outpacing the VARs.
They are.
You would think that, like the resellers are really skilled at pushing the boxes around. Looks like the MSPs are, kind of increasing the revenue streams much faster than whatever VARs can generate, probably because of the service pool.
Yes, it is. So there is absolutely a linkage there. And a lot of what's driving that product revenue growth for MSPs is security and cloud. So with the way the world is today and the need for security services, there's a huge demand for the products, whether that's hardware as well as software. We consider that product that's driving that. And it's also helping to push that revenue growth up for them. Yep.
Unbelievable. Not only that the services are more profitable, but also they are helping the product to thrive.
Yes, 100%. And we should add one qualifier. Your average VAR, I don't remember the figure off the top of my head, but your average VAR is significantly larger in terms of their overall size, in terms of revenue, than your average MSP. So there is a little bit of a size component in here, that they're bigger companies, so they're growing. It takes a lot more for those to grow relative to your MSPs just based on the size, but it's still significant with what you say. Here's a look at 2024 MSP revenue growth by region. So one thing that we do as well, we've got, again, participants in our benchmarking service all across the world. Well, we split the world up into 3 different regions. So we've got North America, Europe, and then we do Australia, New Zealand as a third. And what you see here in the green, the gray, and the blue is a breakout across the product revenue versus service revenue and then total revenue. So looking at your green first for each of the 3 regions, you see North America came in with about 6.2% growth in total product revenue. You've got Europe that came in with 12.7% growth, and then Australia, New Zealand was about 2.5%. One thing that we think we have seen over the course of the last 4 years roughly is that the effect of the pandemic absolutely is playing into this, and the lockdowns in Europe and Australia, New Zealand lasted significantly longer and had a much lengthier impact than they did in, say, North America and the US to be specific. And so as we've come out of that pandemic timeframe, the growth has started to return and started to accelerate for Europe and Australia, and less so for Australia and New Zealand. But you see a lot more growth with respect to services, which that's the gray bar. So when you look at the gray bar across the 3 regions, North America, 7%. Services than the other 2 regions for Australia, New Zealand. And then the blue bar is your look at total revenue growth for each of the 3 regions. And in this case, Europe was the leader at 10.6% total revenue growth. Australia, New Zealand came in second at 7.1%. And then the North America was just behind at 6.7%.
What I'm really happy with is the big growth in Europe, where I reside, obviously, 10.6. Overall growth looks like Europe is, on fire.
Yes. We're very happy to see this, and we're starting to see great results for many European companies. We're starting to see some of that M&A activity that has been really strong in North America really start to pick up in Europe, and then also in Australia, New Zealand. So yeah, good signs in the market.
Absolutely. Do you have a breakdown into more European countries, like the individual countries in the report, or is it aggregated at the European level?
It's aggregated at the European level, so Europe as a whole.
Okay.
And here's one of my favorite charts that we have in the report. So this is taking a look at EBITDA profitability by profit quartile by revenue size across just MSPs, so managed infrastructure, managed services, that formal name we use. To give you a little bit of backstory here, so one of the common pieces of feedback we get from MSPs of all sizes is, hey guys, I am at X size, I might be a smaller MSP, I might be a larger MSP, and there are some reasons why I cannot achieve best-in-class profitability because it's too expensive to hire good sales talent, the technical talent is too expensive, and I just can't do it. We started producing this, I believe it was about 2 years ago, and we were enamored at this because it truly proves that is a 100% misconception. So what you're looking at across these different revenue ranges is that there are indeed best-in-class companies. That's what you see in the green. There are median and there are bottom quartile. Now, what you see as you move from 1 million all the way up to 50 million and up is the highest range we've gotten here. Is yes, there are some shifts in terms of the percentage of companies who are in each of the 3 tranches, but the point is still the same. At any size level, if you are following the right operational best practices, you can absolutely achieve best-in-class profitability for your size range, or for your size.
And it's a similar best-in-class profitability, or is there a difference?
Can you repeat that? I'm not sure I follow you there.
Do smaller companies have a similar profitability ranges, or is it changing? Do you have it in the report?
I don't believe we do. So again, what we still find is that smaller companies, they're still best in class performers who are sub $1 million or right around there. The volume of them, yes, there are obviously fewer of those companies, if that's what you're referring to. But it's still 100% possible, yes.
We did only show a snippet, a couple of charts, and I think there's a much bigger amount of data and information in the report itself. Correct, Aaron?
There 100% is. We've got about 400 pages of information in the report, so it is very lengthy. Here is a breakdown of what you see. So focusing, we usually try to include a special section in each iteration of the report, and we try to focus in on one area that we believe is something that we want to highlight. So this year we focused on macroeconomic impacts on TSP performance. We also focused in a little bit on budget attainment. With our benchmarking tool, we added in a budgeting module last year. And so we've got some really good insights that have helped us try to show some understanding of how folks are performing relative to their budget and what we see with respect to maturity and performance there. We also look at, again, we've been running this report for 20 years. So we have 20 years of insights that we can look back and see the trends in terms of profitability and performance across the TSP community. And then again, we have the breakdowns that go into more intimate detail for each of those predominant business models. So for all of them, we have breakdowns for the revenue, the cost, what are we seeing for the SG&A side and some of those profitability ratios. Yep.
It's a very, very detailed report with a lot of graphs and a lot of insights about the performance, and really great for benchmarking of your own performance versus the rest of the market. You can kind of find your perfect spot as a reseller and see how your performance is kind of comparing to some of the others, which parts of the business are performing better, how are companies similar to you doing, and what would it mean if you would change your business model, if you would shift your business model to another type, predominant business model, to another type of business, maybe move from VAR to MSP or VAR to a technical services, would name you can kind of attest this and see that for yourself, what kind of benefits you're going to see from the financial point of view, not only from a gross margin, but also from the company valuation. Yeah.
Yes. So that the third row you see here, that value creation strategy payoff, we show over time what is that approximate value that each business model potentially is garnering in terms of what that might represent to a buyer if you were to ultimately sell and transition that business. So yes.
I'm pretty sure everybody's excited by now to learn how to get your hands on this report, Aaron.
Yeah, so some of the data points I pulled were just a snippet of what you can find in the executive summary and in the overall report. The QR code over on the right will take you to our website, dedicated website we've got. You can download the executive summary. It's about 12, 13 pages, if I'm not mistaken. You can also purchase a copy of the full 300-page report. I think we came in a little under 400 again. And we've got a lot of great insights in there again, and we break that performance down by both those PBMs and then as well by the geographic regions, the three that we've talked about previously.
I purchased the report. It's fantastic, and if I can offer a hint, and I didn't discuss it with Aaron, so I'm not sure he knows what I'm trying to say. But if you're gonna go and join the IT Nation Connect in Orlando, they will probably offer some kind of a discount for the report. That's how I got my discount. I didn't pay the full price, but what I've done is I attended the IT Nation Connect and the IT Nation Europe, and during those events, I managed to go to some of the Peter Kujava's presentations about the profitability and some of the insights that he shared about the report, the program, the analytics that the service leadership teams is doing. And then at the end of the presentation, there was this kind of an offer where I could get a discount on the full report price, and I took advantage of it in a heartbeat. And I will do that again when I'm meeting Aaron in Orlando in November again.
Yeah, so in conjunction with all of our events, so we've got IT Nation Connect Australia, New Zealand coming up in Sydney in about 2 weeks, if I'm not mistaken. The big one that you're referring to, yes, IT Nation Connect in Orlando, Florida, it comes up every November. And yes, as part of many of our events, we do like to offer some fun promos to help try to bring the price down a little bit and offer some value back to folks who get out to some of our events. I do also want to share that we are working on one new product, I'll call it, that is a slimmed down version of our benchmarking that we are planning on unveiling later this year in conjunction with IT Nation Connect that dovetails with this too. And there'll be some more news and info about that coming out in the coming months. So yes, got a lot of fun things coming down the pipe here.
When it's out there and available, Aaron, please come and share that with the team here, with the listeners, so they know what kind of goodies they can get their hands on from service leaderships. I find it extremely valuable and insightful.
Yes, I will be more than happy to, and we are really excited. We think it'll be a huge benefit to far more partners with respect to trying to understand how they can drive financial improvement, operational improvement. So yeah, we're really excited.
Thank you so much for joining me today, Aaron. I'm looking forward to our next conversation soon. And I'm not sure if you're joining Australia and New Zealand. I cannot go there. It's like 24 hours flight for me. So it's a little bit too far away. But I know, knowing all the other events, I know it's going to be a great event.
Yes, unfortunately I won't be making it there as well. I would love to. I've been to Australia, New Zealand once for one of our events out there. That was a lot of fun. I have a lot of fun Aussie friends I've been able to meet over the years. I'm sure it'll be a great event, and look forward to hearing some of the feedback, and looking forward to being at Connect. I will be at that one in Orlando in November.
That'll be great. That'll be great. Thank you so much, and speak to you soon, Aaron.
Thank you, Maciek. Appreciate the time.
Bye.
All right, bye.